Which brings us to the final strategy, which is the liquidation sweep reversal. Now, to me, this is my favorite. And I personally think that this is the most high probability one compared to like the other two strategies, right? Because I've seen this play out 1,000 times by now. Price always respect liquidity. Liquidity and timing. All right, so here's what I mean. Liquidation sweep reversal is just a fancy name of waiting for price to sweep liquidity and entering upon the mitigation of the zone that swept liquidity. So similar to like what we have on the pullback strategy that I just showed you at the start of this tutorial itself. First step, identify who's in control of price. Remember supply and demand. There's either buyers or sellers that is in control of price. And it's very, very clear when you actually identify the market structure. The structure tells you the trend direction. So if I'm looking at the structure right now, I can see that buyers are in control of price. How do I know that? Well, because price actually went up, higher high, higher low, higher high, right? And then potentially creating, higher low right here, but then potentially creating a higher high. But it did not really create a higher high, and then before price came down here. Nevertheless, buyers are still in control of price, at least on the internal structure. On the higher time frame structure, it's just like a massive chop right here, right? But you can see, even in this massive chop, you can kind of gauge the trend direction. Price went up, and then it goes down, goes up, goes down, and then right now we are potentially on the move to the upside right here. So now we have identified that buyers are in control of price. It's not the best example, right? Because after all, on the higher time frame, price is still kind of stuck in this consolidation, but it's sufficient, right? So cool, we have identified that buyers are in control of price, which means we want to trade from demand zones, right? Which means we don't want to sell, right? Because when price goes up, it can go up even higher, which also means that we don't want to trade from supply zone. We only want to trade from demand. Now, the next question becomes, cool, Brad, where is the demand zone? Which brings me to the next step. Mark up your liquidity zones. And ideally, it should be a point of interest, a zone that is aligned with the trend direction that swept liquidity. That's what I mean when I say a liquidity zone. That's what I mean when I say an institutional zone. So in this particular case itself, we saw that price went down here, create equal lows. When there's an equal low just like this, retail traders, they're going to enter for longs, right? Because that's all textbooks say. Oh, buy at double bottom. And guess what? That is just available liquidity being built up below those lows right there. Good old juicy liquidity. I'm talking about like medium breastic liquidity things right there, yeah? So later on, price came down, swept all the stop losses, liquidate all the retail traders, the poor little retail traders. Now they have to go back to work at McDonald's. Now they are crying because they are frying burgers instead of looking at candlestick charts. Cool. But if you're a professional trader, you know exactly what you're doing and you understand the game. And guess what? You can either blame the game or play the game. And if you plan to play the game, you might as well win. Which is why it's so important for you to understand liquidity. Right? So at this point of time, price came down here, swept all the stop losses right here, swept all the liquidity. This is clear as day a liquidity sweep. Because price took out the stop losses right here, and he also gave us like a very sharp V-shaped reaction just like this. And when he gave us like a sharp V-shaped reaction just like this, guess what? It also broke structure in the meantime. Because if you go to the 1 hour time frame, you can see that over here, price was creating lower highs, lower lows, lower highs, lower lows. Later on, price reversed and caused price to start creating higher highs and higher lows. Right? So it caused price to actually broke structure. And this is the origin point. Like this entire move to the upside, it originated from this area right here. Which is also why I can be comfortable, I can be confident to say that there is a demand zone that swept liquidity at this price point right here. Okay? This is the demand zone that swept liquidity. This is our liquidity zone. Third step, enter upon the mitigation of the liquidity zone. What does that mean? That means you don't do anything until price get to that zone. Like I said, the hard part in trading isn't spotting in A+ setup. It's in ignoring everything else. That's what makes trading difficult. Right? Because your fingers start getting itchy, you start entering for a buy right here because you hear a friend saying that Solana is going to go up to like $5, no, not $5, but like $300 or whatever, right? And then start entering for a buy right here. You're getting in at the wrong price, at a wrong time, at the wrong freaking place, right? So you shouldn't be lamenting on why you're unprofitable. So that's not how we do. That's not how we operate. We don't operate based on emotions. We don't operate based on guesswork. We operate based on structure, based on order, based on rules that is pretty much governed by our trade plan, right? Which is why you don't do anything here, okay? You chill. You set an alert at this price point right here at the liquidity zone, and you do nothing until the alert is triggered. So you wait very patiently. Once price step into the zone, perfect, man. And by the way, this is the entire pivot, right? I'm drawing up the entire pivot. But if I were to draw up the refined demand zone, this will be the refined demand zone, right? That's the one that I'm really interested in. But anyways, price made its pullback, right? Once again, price has shifted in the bearish in the short term. Are we surprised? Do we think that, oh, Solana is going to go to $0 right now because price is going down? No. We know that price has shifted bearish because it has an objective. And the objective is so that it can facilitate the pullback into this liquidation zone, so that more institutions can actually enter for more long positions, right? They can actually quietly accumulate their buy positions. As a result, price starts pulling back into this price point right here. And when that actually happens, cool. This is where you can enter upon the mitigation of the liquidity zone, right? So you can enter for like a buy order upon the mitigation of the zone itself, right? And you can potentially place your stop loss below at like this reversal candlestick right here. And you can target 3R or 2R or whatever your trade management method is. Now, before I actually play this trade out, I want to show you something. When price actually does this, notice how it just doesn't like, it didn't like mitigate this zone and just starts reversing and go back up. Instead, it came down, mitigated that zone, then it came down, swept that liquidity right here below this low right here before it actually started going up. This is what I mean when I say that no matter what happens, there always needs to be some form of liquidity sweep. Like that's my favorite word in my trading dictionary, liquidity. Because if you can't spot the liquidity, then you are the liquidity. So, like I said, instead of blaming the game, learn the rules on how the game is being played and freaking win. That's what I'm trying to do for you. I'm rooting for you to win. That's why I'm showing you the secret sauce right here. So you better like this video. Anyways, price started reversing right here at this high. After it swept liquidity, boom, we got our entry in there. We target 3R, and let's look at how these beautiful positions play out. Right, down price consolidate a little bit. If you actually place a stop loss like a few pips below this low right here, you give it a little bit of breathing room, you will not get stopped out. Right, and eventually price went up there. Now, here's one thing I want you to take note, right? Let's say you get stopped out right here, okay? Let's say you get stopped out right here because you are the freaking liquidity, all right? Let's say you place a stop loss below this lows, you get stopped out. It is what it is. You are the liquidity. Guess what? You can actually look for another entry right here. So I personally have a rule that I will attack a point of interest, I will attack a trade idea twice. So if I get stopped out right here, I can enter right here. And then I'll place my stop loss once again below the reversal candlestick that mitigated at this liquidity zone. Because you are still following the rules within the trade plan, right? This is not you refusing to accept the fact that you're wrong. No, this is you trying again. And one thing I want you to understand is that no matter how good you get at understanding liquidity, you will never ever be able to predict with 100% certainty when it's going to be the last liquidity sweep. Like, look at how many liquidity sweeps we have before price actually moved to the upside. 1, right here. 2, right here. 3, right here, before it got sufficient liquidity and pumped to the upside. So, trading is a probability game. And all we can do is to really try to wait for as much confluences as humanly possible to stack the odds in our favor, right? To stack the chances on our side so that Lady Luck can shine on our side. And we do that by understanding liquidity so that we can avoid being the exit liquidity. So we can do our best to spot the last liquidity sweep, right? Like I said, do our best, not predict it with 100% predictive power because that's impossible. You will never ever know what smart money is thinking. But what you can do is to spot their footprints and follow their footprints. And that's what understanding liquidity allows you to do. So yeah, that's pretty much the entire trade setup right here, right? Very, very simple. Just to show you another example on this particular trade itself. Price went up there, right? Give us a market shift over here where price actually started shifting bullish. Once again, buyers are in control of price. And guess what? What we have right here, price went up there, broke structure, started pulling back, right? Coming back to strategy number 1. We know that price is pulling back. Where is price pulling back to? It's going to pull back to some form of demand zone, right? Demand zone has swept liquidity ideally, and this is going to be extreme demand zone. And this demand zone have also swept some liquidity below these equal lows right here. Okay, so price pretty much mitigated that, started going up, but there was insufficient liquidity, okay? Insufficient liquidity. So as a result, where is the next available liquidity? Below this swing low right here. So later on, price went down there, swept that swing low there, before the real move actually happens. Right, so this is where if you're using this particular entry model right here, the liquidation sweep reversal, you'll be patiently waiting for the final liquidity sweep to happen, which means you will wait for inducement to be built up right here. You wait for the traps to be laid out by the smart money. In this particular case, price goes down, pulls back, goes down, pulls back. Equal lows right here. Juicy liquidity. You won't enter early because you know that this is simply a trap laid out by smart money, and you wait very patiently for price to swap that low, swap those equal lows right here. Then you enter right here. And then you place your stop loss above and the reversal candlestick, and you target 3R, and you smash your TP. As simple as that. Like I said, guys, simplicity is the ultimate sophistication. Simplicity scales and complexity kills. If you keep your strategy simple, methodical, structured, systematic, mechanical, you can already outperform 99% of the traders out there. Simplicity works. It's profitable, it works, and it's incredibly useful. So yeah, that is pretty much the 3 setups. Let's return to the educational materials and let's continue talking about how to tie everything together.